Hi everyone, today is Wednesday, June 1st. It's around 1:30 p.m. Overall market action has improved over the past several weeks as all major averages now reside above their short, intermediate, and long-term trend lines. These are very good technical developments. As I mentioned in the past update, the major averages have remained in a trading range over the last 2 years. In addition, I mentioned in the last update that I believe we would resolve the trading range with a breakout to the upside. Right now, we are trading in the upper third of that range. Historically, when a market has consolidated over a 2-year period, pent-up pressure due to a lack of overall progress can produce decisive and substantial moves. In other words, long consolidation periods in the market have generally been followed up by longer and more substantial moves. We will see if this is the way things play out currently. Further, there appears to be many recent economic announcements that may signal a higher market in the near future. And let's look at a few. Oil prices have risen to about $50 a barrel, but on a relative basis, this is still historically on the low side. New home sales rose to the highest rate since January 2008. And an index tracking contract signings of previously owned homes hit its highest level in a decade. Lawrence Yun, chief economist of the National Association of Realtors, says, even if rates rise soon, sales have legs for further expansion this summer. Durable goods orders jumped 3.4% in April, according to the Commerce Department, and the Atlanta Fed revised second quarter GDP growth expectations to 2.9% from 2.5%. Now contrast this with the American Association of Individual Investors Sentiment Survey, which indicates today that only 17.8% of investors are bullish, lowest level since 2005. So all of the recent economic data announcements point to a slowly improving economy, which may translate into an improving market, yet only roughly 17% of investors are bullish. So what is one to do about the current conundrum that we face? For some direction, let's take a look at one of Warren Buffett's most famous quotes. Be fearful when others are greedy, and greedy when others are fearful. In the meantime, I'd like to remind everyone about 401ks that remain at the former employer. I've had many clients move jobs recently, and they were unaware that their old 401k could be immediately rolled to their self-directed IRA. This enables them to invest in virtually anything in the marketplace, rather than the limited choices available only through the old employer's 401k. Further, in most cases, we're able to lower the fees being charged. This added flexibility and lower costs should produce better results over the long run. If you're in a situation, please don't hesitate to contact us. We can discuss your options. And as always, should you ever have any questions regarding anything financial, we're here to help. And thank you for listening.